Right, let's address the Bajaj Auto numbers as well. We'll go back across to that interaction soon. The volumes, of course, we knew that number which has come in. The turnover has come at 7,715 odd crores. Revenues from operations 7,386 crores. For Bajaj Auto, there is always a reported EBITDA and there is a different EBITDA because the company, I think, doesn't take some hedging expenses. They put it as operations, but I think the markets believe it as it's not operational in basis. So 1,153 crores in terms of operational EBITDA, operational profit of 1,087 crores, and the PAT number has come in at 1,061 odd crores. When you look at the margins, it's about operating EBITDA margins at about 15.6%, and the consolidated profit after tax is 1,170 odd crores. Now, when I just compare these numbers in terms of EBITDA, operational EBITDA in Q1, as I told you, a reported EBITDA is 1,153. When you compare it to Q1 of last year, it was 441, but it was a lockdown quarter. Q4 of previous quarter was 1,558 crores. So there has been an impact as far as the overall margins are concerned. Margins were close to about 18% in Q4, which has now come in at about 15.6 odd percent. So that has, something which has happened. Of course, companies have taken price hike in Q1. It is something which was, visible in Asian Paints, some of the other companies as well. I'm just trying to find out as to what did the management have to say, about this entire number. So EBITDA from operation was 1,153 crores. EBITDA margins came in at 15.6 versus 18%. The EBITDA was largely impacted on three accounts. That's what they've given an explanation. Lower revenue from operation resulted into increased fixed cost. That is the domestic side of the market. I think the export side of the market would have done well. Increase in the cost of raw material, which we were just talking about, net of prices, resulted in a lower margins of 220 basis points. The above has been partly offsetted from better than expected US realizations and improved mix. So that's what the management has to say. We'll of course wait and watch as to more details which come in, but at this point of time, we have these details coming in, and I can just look at the stock. I think it's up around 1 odd percent. So there is no major movement that is happening. Okay, Mitul Shah is now with us from Reliance Securities. Mitul, what is your first reaction? EBITDA, or the reported EBITDA, has come at 15.6%. You think it's purely because of the increase in raw material cost, but price hikes will take care of it in the coming quarters?
Yeah, margins of 15.6% is quite commendable in this situation where we expect raw material prices will impact the margins of all the auto OEMs and including all two-wheeler companies. We estimated 15.1%, so it is slightly better than our expectation. And on the revenues and net profit front, it is more or less in line with our estimate. So, Pankaj, here we need to note very interesting thing this time is that export contribution overall volume is very high. It is all-time high. Last year, first quarter, it was 55-56%, which was a record high at that time. This time, it is a 65%. So, 65% of the volume is coming from a market where company enjoys high margins, and of course, currency benefit is also playing important role in this quarter.
Right. What do you think of the domestic market? As things open up, will domestic contributions slightly increase from here on?
Now onwards, certainly April and May was impacted by second wave disruptions. So now onwards, domestic volume will pick up. But within domestic, we believe that three-wheelers will now start growing at slightly better pace compared to the domestic motorcycle segment. And export will still remain very healthy, as company management already highlighted earlier that they are going to record more than 200K monthly volume now onwards, which is definitely a double-digit growth on a full-year basis for export compared to FY21 volumes.
Right. This is the first auto company, Mitul, which is declaring numbers. But, somehow you get a sense that this is a completely different company, as you said about exports. So you cannot, judge what will a Hero do or TVS do in this environment because looking at these numbers.
Yeah, absolutely right. Because this company is now 65%, as I told, is a volume contribution. Revenue contribution would be even slightly higher. And considering the higher margins from the export, net profit contribution for Bajaj is definitely different than other companies like Hero particularly, where nearly 97-98% of the volumes are purely domestic. TVS also has more than two-thirds of volume coming from domestic. So negative impact of the commodity cost got negated by higher exchange rate, favorable exchange rate for Bajaj due to higher export, which may not be the case for other domestic companies. That's why we may see slightly higher margin pressure for other companies compared to Bajaj Auto.
Right. When the management will be speaking, what are the few things that you would want to hear from them?
Again, we would like to see whether company is able to increase their export guidance because situation outside is improving and companies new launches are also getting a good response. So that would be one parameter. And secondly, on their margin guidance or any indication for margins going forward. So basically, we want to understand the impact of the commodity prices, how much has been passed on, and how much they are planning to pass on by increasing the vehicle prices. So that will decide the future margins for company.
Right. Ashwin Patil is also with us. Ashwin, what is your first reaction to the numbers?
The numbers are fairly in line with our expectations. I think, slightly lower, I would say, because we were expecting close to 16% margins for Bajaj Auto. But nevertheless, they have performed quite well. Keeping in mind the pandemic scenario in Q1, still the numbers were quite encouraging. And mainly, if you see at the exports, the company has been performing much better, and that is the edge that they have got over their competitors. And Q1 numbers, the volume numbers were also quite strong because of the export numbers. And even in the domestic market, the company has been performing well. But, its other competitors like Hero, TVS have been performing well, much better in the domestic markets. But the company, Bajaj Auto, has specific edge because of the higher margins that the company, earns in the export markets. So overall, at the PAT level, I would say that the numbers are quite in line. At margin levels, they are slightly below our expectations, but at top line, they are quite, again, in line with our expectations.
Right. What is your reaction as far as the entire noise around EV, Ola is concerned in this environment? You think that is something which will keep some of these stocks slightly lower?
I think, the benefit that the company is getting in exports, I think that may negate the impact of what you are talking about. Yes, the impact will be seen a bit on the stock, but I think overall impact will be not that hurting the company.
Right, Ashwin. Thanks so much for your time. Mitul is good always to get some perspective from you. Bajaj Auto in focus, up about 1.8%, as both of our analysts said. That numbers are looking indecent considering the environment, and of course it's exports which is leading these numbers. On that note, we're taking a break. Coming back.